Our exchange community has grown since 1792 to more than 1,350 members, more than 650 member firms, more than 2,500 offices, more than 64,000 people, handling the orders that funnel into this central market, where financial institutions direct a great volume of transactions to buy and sell listed securities. Each minute, the institutional investor has an average of $12,000 of new money to invest. $12,000 a minute. There are a good many ways that institutional investors are taking best advantage of this versatile market created by broad public participation. And because most of your orders are executed in the regular auction market, let's take a closer look at it. Starting with a quick rundown on the men who transact your everyday business on the floor. Who calls for the firm's floor broker by flashing his number. The broker goes to his clerk and picks up the order. He goes to the post, gets the quote, and joins the crowd. As other brokers bid or offer with him, he states his offer in a loud, clear voice. The sale is made and recorded. There are no written contracts. The broker's word is enough. News of the sale is sped to the ticker, and word is sent to your member broker. Each specialist handles an average of 11 stocks. With market activity constantly flowing around him, the specialist performs the first of his two important functions, acting as a broker's broker. When your floor broker cannot immediately complete an order at an acceptable price, he can entrust the order to the specialist, who then becomes a member of your market team, obligated to get you the best price he can. The order is then entered in this confidential book. Here's the way it works. Because he knows his issues, because he knows the market, the specialist is able to perform his second job, helping to keep that market fair and orderly. Though stock prices rise or fall because of supply or demand, it is the specialist's function to keep the spread between bids and offers and price variations between sales as narrow as circumstances will permit. As a result, he's usually buying for his own account when the market is falling, or selling when the market is rising. But he may buy or sell only when there is no public order on his book at that price. But this flexible market is also away from you on the floor. However, let's assume you insist upon dividing your block among 3 brokers. You give this broker the first part of your order to sell. There's a down tick. After the execution is reported to you, you give the second part of the block to another broker. Another down tick. And the third part to still another broker. You'll just become your own worst enemy. One broker, completely in your confidence, knowing exactly what you wanted, could have been much more efficient. But the real test of a market's efficiency is not how it operates when things are going well, but how it functions when something unexpected happens. In times of crisis, the exchange is open every minute of every business day. Its member firms are available to customers. Their lines are open to the floor. The specialists are at their posts ready to team up with your broker, ready to do their part in meeting the exchange's objective, to keep the market orderly. the emergency passes. The auction market, created by public orders, responsive to your needs, manned by experts. It is central, flexible, liquid. Each day, this market handles more than $125 million in buy and sell orders. Its special procedures, its experienced market teams, provide you with all the techniques, all the services to carry out your investment decisions.